help you pick the right stock at the right time.
Hello and welcome. This is all you need to know. I am Agam Bakir. Let's start by taking a look at the global markets and how they panned out. When there has been some amount of strength, as you can see, the American indices did end largely in the green last Friday, and that has had a positive impact on the European indices too. While gains coming to the quantum of around 0.2%, and that means that we have seen some of that seep through in the Asian markets as well. The SGX Nifty at this point in time is also advancing by as much as 0.4%, up by 43 points. But well, last Friday was a largely range-bound session for the benchmark indices in India here, with the Nifty declining by as much as 0.2%, the mid-cap and the small-cap indices moving in tandem with the large-cap index. When it comes to the banking indices too, the Nifty Bank along with the PSU banking index declined, bearing down largely on the benchmark indices. With that, let's take a look at some of the other sectoral indices. Media and the metal indices were the only ones which were in the green last Friday. But when it comes to the ADRs at this point in time, Vedanta is the one which showed the most strength, advanced by as much as 6%. We have Wipro, HDFC Bank and Tata Motors also ending in the green. Some gains coming for Dr. Reddy's, Infosys and ICICI Bank were closing marginally in the red. At this point in time, we did see about 76 crores worth of net selling from foreign institutional players. On the other hand, domestic institutions bought stock worth around 905 crores on a net basis. But moving on, when it comes to contribution, and as I was suggesting earlier, it was essentially the banking names which bear down on the indices. Case in point, ICICI Bank, Yes Bank and HDFC Bank. On the other hand, it was Reliance and HDFC largely which gave some amount of support to the benchmark indices. But let's take a look at the futures and options space then. More unwinding coming through on the Nifty futures, August ones of course, and do remember we will start seeing more unwinding considering we are heading into expiry week. But when it comes to the Nifty banking futures too, we did see a decline of around 1%. When it comes to changes in open interest, or rather the open interest distribution still lies with 11,500 put on the lower end and 11,600 call on the higher end. This does give us an indication of some amount of consolidation, at least in the near term, but let's just wait and watch. Do remember, because it's expiry, it could just get a little more volatile going in. But when it comes to your change in open interest last Friday, the most active options were the 11,600 call, which saw more writing, and the 11,500 put, which saw unwinding coming through. The put call ratio, the Nifty put call ratio came off to a certain extent at around 1.6. And the Nifty banking index put call ratio also came off to around 0.91 at this point in time. We did have the likes of Hexaware and Jet Airways move into the F&O band. Jet Airways of course will be in focus because it does move in and announce its earnings today as well. But in terms of some other stocks, we have Apollo Hospitals going from strength to strength, continuing to build on the gains. Fresh longs seen there. We also have fresh longs in BHEL that's also seen about 6% increase in OI, and unwinding coming through in something like a Piramal Enterprises. So we've actually seen short covering considering the underlying advanced by as much as 2.3%. So those are some of the stocks that we are watching out for in today's day of trade. But now let's go across to Bloomberg's Rosalind Chin for all the top international headlines.
The US and Mexico are said to be close to resolving their differences on NAFTA, and an announcement may come as soon as Monday. Bloomberg is told the two sides have achieved significant breakthroughs in the past few days on autos and energy, paving the way for an accord and opening the door for Canada to rejoin the talks. President Trump tweeted on Saturday that there could be a big agreement with Mexico soon. The IMF expects Saudi Arabia's budget deficit to fall below 5% of GDP this year, the first time it would have done so since the oil crash battered the kingdom's finances. The IMF forecasts the deficit to narrow to 4.6% of GDP and to 1.7% in 2019 on better collection of a new value-added tax. The assumed expiry of royal handouts, more energy price rises and tighter spending. The European Union faces a new threat, with Italy saying it's prepared to veto the bloc's budget over illegal migrants. Deputy Prime Minister Luigi Di Maio says that Italy will look at all measures concerning the single market's finances and will oppose anything that is not convenient. Di Maio's populist government is increasingly irritated that other EU states refuse to accept migrants that reach Italy by sea. And Shinzo Abe has launched his bid for a historic third term as Liberal Democratic Party leader, hoping to put scandal behind him and become Japan's longest-serving prime minister. The announcement kicks off what's expected to be an easy campaign. A recent poll from Kyodo News says Abe has the backing of 77% of LDP lawmakers. The party votes on September 20th. Global news 24 hours a day, on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rosalind Jim. This is Bloomberg.
He was putting in this great metaphor of, you know, you can guide your boat by the stars. What about guiding the economy by policy stars? Now, he also starts out at the beginning of the speech by noting that unemployment is near a 20-year low, inflation is near a target, giving a positive assessment on the economy. So no sign that he's worried about the economy that would deter him from rate hikes. Then he gets into this whole thing about past errors in this system of guiding by the stars, like not being quite sure where the natural rate of unemployment is. He also says that navigating by stars is sometimes straightforward, but if you try to guide policy by the stars, when the location of the stars is changing, it can get tricky.
It's a bit tougher.
But he goes on, though, and I think this is the part that the markets really care about at this point. He said the Fed must avoid moving too quickly and hurting the expansion, or moving too slowly and allowing, in parentheses, inflation to get out of control, and then you get overheating. He also said at the same time, though, he sees no elevated risk of overheating right now, in part because he doesn't see any signs inflation is going to go above 2%. So finally, one more thing I want to add. He said, because I think some people are saying dove, some people are saying not dove. He said the current rate hike path takes into account both of the risks he just talked about. Bottom line, people say we're on track not just for one, but 2 rate hikes this year, including Rob Kaplan, who was at the symposium, who was president of the Dallas Fed. Here's what he told Bloomberg Television.
Ought to be moving toward neutral, which means 3 or 4 increases over the next 9 to 12 months. And I think at this point, moving in September and December is consistent with that path.
You know, notably, Bloomberg Economics does see that he took a dovish policy turn here, because if you're willing to look at these variables that have been used for so long by the Fed and say you're going to look more at the economy itself rather than the variables, that's dovish. They don't see a rate hike, the rate hike after the September hike, I should say, until next year. But a lot of people say, well, not such a clear sign. And in fact, I think the majority, the consensus is still looking for 2 more rate hikes this year.
On to Indian equity markets, stock in focus today. Our stock of the day will be JVK Power and Infra, on back of the company inviting bids from EPC contractors for Greenfield Navi Mumbai International Airport project. Well, if you talk about the project, the scope of the work for this project includes a number of things, which is cut and fill works, construction activities, and the last date of submission is around September 10 for this bidding process, and a rupees 16,000 crore project is likely to be completed by FY21. To give you a little background about this project, the Navi Mumbai International Airport project is a special purpose vehicle of the step-down arm, which has got a financial closure only back in July 2018, and the closure for construction is for the phase 1 of airport. Yes Bank has been appointed as the lead manager for phase 1 and phase 2, and notably Malaysia Airport Holding reportedly has been evaluating picking up a minority stake in the airport project of the company.
Shifting focus to currency and commodities market, talking about Indian rupee first, the rupee on Friday made a strong comeback versus dollar, and it ended 20 paise higher at 69.91 levels a dollar, thereby snapping its 2-week losing streak. The home currency advanced on the back of a weaker dollar overseas, and also on the back of foreign flows into local equity markets. That apart, if you see bond markets remained unchanged for the entire higher week, and 10-year benchmark bond yields ended 1 basis point lower at 7.87%. Well, on the global front, as I mentioned earlier, dollar index now trades lower for the second straight session. It trades well above the 95 mark. Remember, it ended 0.5% lower on Friday after Fed chair said in a speech at Jackson Hole that he do expect further rate hikes in the coming year. However, he suggested that Fed fund rates were coming close to neutral level, and hence the Fed may stop hiking rates once they reach an equilibrium level. And hence we have seen the index dropping nearly 1% last week, thereby marking its worst weekly decline since Feb. That apart, if you see, both euro and pound are trading higher versus the greenback in the early Asian hours today. And lastly, speaking of dollar rupee, now it is trading at 69.8 levels against the dollar in the non-deliverable forward markets, which indicates a positive opening for Indian rupee in today's trade. Well, having said that, let's shift focus to the commodity space. Good morning, Jayesh. What cues are you picking up today?
Morning, Saloni. Seems to be a good Monday as far as the commodity space is concerned. In fact, last entire week, all the commodities, the entire basket managed to search for itself, starting off with oil prices, which managed to hold on gains once the US rig count that declined at the fastest pace since 2016. So the working oil rigs in the US market fell by 9 to about 860. That's as per Baker Hughes' data. Now, what also happened last week was that WTI posted its biggest weekly gain since the month of June. Shifting focus to the base metal space, the index itself posted its best week since June as well. Copper rose on the back of its cancelled warrants, surging the most in about 5 years, as did zinc, whose cancelled warrants in fact rose about 73%. As far as other base metals are concerned, we had the likes of aluminium, which was up about 1%, lead was up about 1.5%, while tin was the only one which managed to decline in trade. That ended about 0.5% lower. And similar action can be seen from the Shanghai Futures Exchange, where most of these base metals are in fact trading with a positive bias. Zinc has gained more than 1%, while Shanghai Steel is showing some bit of signs of weakness, down about 0.8%. Lastly, as far as precious metals are concerned, we saw an uptick in gold prices as well, which posted the biggest gain in about 5 months. And this was on the back of Federal Reserve Chair Jerome Powell, who signaled that in fact they are going to stick to gradual rate hikes. So that in fact boosted sentiment in the gold prices.
Well, amongst the stocks to watch out for is LIC Housing Finance, which reported a weak set of numbers, while net interest income grew at a muted 6.6%. Net profit growth came in at 18%, but that was largely on account of lower provisions. But even if you look at the other operating parameters, net interest margins came off by 18 basis points to 2.34%, and that's despite a hike in the lending rates that they've taken during the quarter. And the gross NPA is moved up from 0.8% to 1.21%, and this was also on account of higher bad loan ratio in the developer segment. And even if you look at the disbursements, the core retail growth came in at just 8.8%. So weak growth trends continue for LIC Housing Finance. You also have BHEL, which will be in focus. They will consider a special resolution for a buyback. Their AGM is slated for September 19th, so watch out for that one. JK Paper is next on the list. They've said that the contract workers at the Odisha plant have gone on a strike from Saturday. This is one of the 2 plants that they're operating, so you could see a sizable downtick on this counter in trade today. Future retail will be in focus as well, and this is on the back of an ET report which says that Google and Alibaba-backed Paytm Mall may join hands for buying a stake. In fact, the report additionally says that they could invest up to 4,000 crores for a stake between 7 to 10%. So let's see how this one reacts in trade. You also have Apollo Tyres, which will be in focus. They're planning a $1 billion investment in a new Andhra Pradesh plant, and also for global expansion. This is once again an ET report. You have DLF, which is said to be seeking a strategic partner to develop a 12-acre Gurugram plot that they've bought for about 1,500 crores or so. Once again, an ET report, and it also says that they're in talks with PE firms which have an exposure to NCR for this partnership. You have Hexavet Technologies, of course, which ended 14% lower on Friday on account of the promoter selling 8.4% stake. Interesting is the name of the buyer. So you have Citigroup Global Markets, which has picked up a 1.3% stake, and another 1.3% stake has been picked up by Societe Generale. And finally, you have Mahindra CIE Automotive, which will be in focus. The promoter Mahindra Vehicle Manufacturers have sold a 0.8% stake, but the promoter stake as of 30th June was about 69.8%. So these are the list of stocks that you should keep an eye out for.
Jet Airways will be reporting its numbers today. Now, it's no surprise that the numbers are expected to be weak for the airline company. Now, if you see the headline numbers, though, the revenue is expected to be higher by around 12%. On the bottom line front, the company is expected to report a net loss for the second consecutive quarter. However, for this quarter, the loss amount is expected to be half of what the company reported in the fourth quarter of financial year 2018. Now, for Jet Airways, it will be a combination of lower passenger growth, lower passenger load factor, weaker rupee and higher fuel prices that will be impacting the June quarter earnings. Now, the passenger growth on the domestic front, if you see, was only 10% for the airline company, as against a 20% growth in the for the industry. On the international segment, the passenger growth had, however, declined by around 1% for Jet Airways. Now, the passenger load factor also declined for the airline company on both on the international and on the domestic front. On the international routes, it declined to 79.5%, while on the domestic route, it declined to 81.8%. Along with this, rupee also depreciated by close to 4%. Now, for an airline company, nearly 60 to 70% of the total expenses are dollar denominated, which means that if rupee depreciates, they need to spend more for these expenses. Lastly, also the fuel prices were higher by around 4% in the June quarter earnings. Now, for Jet Airways, the profitability will largely depend on the average airfares. Now, estimates are that it would be higher by around 2% for the airline company, but if it declines, then the net loss amount could be higher for Jet Airways. Now, key things to watch out for would include the management commentary on liquidity issues. Now, we all know that Jet Airways is facing cash crunch issues. So how is the management planning to address that? Are they planning fund infusion or a stake sale in Jet Privilege? That will be one key thing to watch out for. Along with this, the other linked issue is the debt repayment. Now, investors would want to know how comfortable the company is when it comes to repaying its principal debt, because if you see over the period, the company has been able to reduce its net debt to close to 8,400 crore rupees from 12,000 crore rupees in financial year 2015. But along with this, its ability to service this debt, now that has fallen at a faster rate. The company's EBITDA for the financial year 2018, after adjusting for foreign exchange losses, was close to 700 crore rupees, which is nearly 1/3 of what the company reported in financial year 2016. Now, the third thing would be the management commentary on capacity guidance. Now, Jet Airways has plans to grow its capacity by close to around 8 to 10% annually, but will the company cut down its capacity guidance because of cash crunch issue will be a key thing to watch out for, because its growth going forward will depend on this capacity guidance. Lastly, the key number that I'll be more interested in will be the ex-fuel cost number. Now, over this last 7 quarters, the company has been able to reduce its ex-fuel cost per available seat kilometer. It has reduced it from 3.3 rupees to 3.17 rupees. So will the company be able to do so for the 8th consecutive quarter will be a key thing to watch out for, because the company can raise funds to support its operations, but reducing its ex-fuel cost will help the company sustain over a longer period of time.
Yes. Well, the current debate that is going on between the market regulator and the brokers on linking the investor's net worth with the equity exposure has 2 aspects to it. One is the logistical aspect and the other is the ideological aspect. Now, talking about the logistical aspect, while the brokers on one hand claim that they are not equipped to calculate the net worth of the investors, SEBI on the other hand believes that brokers need to be aware of what they are selling to the investors. So there is some decorum of product suitability coming into the Indian markets. The brokers in a recent meeting with the market regulator suggested that, for instance, the investor themselves should be allowed to self-certify their net worth, or maybe a CA certificate should be enough. But the market regulator is not convinced. Now, coming to the ideological aspect, the ideological aspect of the entire debate is whether the market regulator should have a say on how much an investor invests in the equity derivatives market, in the equity market, and whether the net worth is the right way of going about the investments. Now, coming about the net worth part, globally there are too many examples where the net worth has been taken as a criteria for suggesting an equity derivative or equity product. But those are by and large restricted to very complex products. And apart from that, even the net worth is one of the criteria that has been considered to suggest a product to the equity investors. Now, so let's see how the market regulator and the brokers are able to come up to a resolution to the stalemate situation, and whether the market regulator is able to take this step to the next step.
Moving on, let's get your check on the top stocks to watch based on Friday's delivery buying and selling. The first stock on the list is Sunteck Realty. Now, that was up about nearly 4% on Friday and saw delivery buying in excess of 50 crores. The delivery volume surged about 141%, while the total volume nearly trebled for itself as compared to its 5-day average. Second stock to watch out for, now that would be Sun TV. Now, that was down about 3.5% in trade and saw delivery selling of nearly 100 crores. The delivery volume surged about 125% as the total volume surged just about 44% as compared to its 5-day average. Last and final stock to watch out for in index name, Titan. Now, that was down about 3% in trade and saw delivery selling of nearly 150 crores. The delivery volume surged about 51% as the total volume surged just about 28% as compared to its 5-day average.
On the big brokerage calls for the day, first we have is Equinor Securities on Thyrocar Technologies. Now, the brokerage has initiated coverage on the stock with a long rating and a target price of 714, which suggests a potential upside of close to 14%. Now, according to the brokerage, company's preventive care segment is expected to see a solid growth aided by deep penetration, comprehensive packages and rising cases of chronic diseases. The company's cost leadership and low-cost model will be further supported by economies of scale, and which will also support the further aid margins of the company going forward. Now, the brokerage also expects the favorable dynamics for the wellness segment of the company on the back of rising disposable income and changing lifestyles. Lastly, the brokerage says that the company's wholly owned subsidiary, that is Nuclear Healthcare, could be the only laggard in its long-term growth strategy going forward. Second, we have is HSBC on Prestige Estates. Now, the brokerage has maintained its buy rating on the stock, but has marginally hiked the target price to 350 from 345, which suggests a potential upside of close to 44%. Now, according to the brokerage, entry into affordable housing segment with the HDFC platform, office space deal with GIC and monetization of hotels and malls will unlock value for the real estate company going forward. Now, the company's share of collection had come down of late due to lack of new launches, while the finished inventory, which was close to 13.5% of the unsold stock by value in financial year 2018, inched up to 23% by the first quarter. Now, these were the two main reasons behind the stock's underperformance, says the brokerage. Lastly, going forward, it is expecting new launches to be the key trigger for the real estate company, as it will not only improve the collections but also improve the cash flows of the company going forward.
There's lots to talk over the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. China's central bank signaled that it's taking action to support the yuan trade as tensions with the US show and no signs of ending soon. The People's Bank of China said late Friday that starting this month, banks resumed using an adjustment known as counter-cyclical factor in the daily pricing of the currency against the dollar to counter the bias towards a weaker yuan. And Japan's Prime Minister Shinzo Abe launched his bid for a historic third straight term as ruling party president, attempting to put months of scandal behind him and become the country's longest-serving premier. And with that, it's a wrap in this edition of All You Need to Know. But don't go anywhere. Lots more lined up. Stay tuned to the Bloomberg Quint.